Good morning, and welcome to episode 215 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, March 12th, 2025. The U.S. and Ukraine have agreed to a 30-day ceasefire in the war between Ukraine and Russia. And according to Secretary of State Mark Rubio, the ball now is in Russia's court. We'll see what they do. U.S. backs away from direct talks with Hamas in Gaza in favor of ceasefire negotiations in Qatar. The Dow, the S&P 500, and the NASDAQ have all been tumbling of late amid concerns about on and off again tariffs and fears of a hard landing developing here in the U.S. economy. Let's take a look at the numbers, and then I want to talk a little bit about debt. Gold today is virtually unchanged. It's down $1 from last week, trading at $2,914.40. It was $2,915.40 last week. Silver's up 2.1% to $33.02. It was $32.34 last week. Platinum is up 2% to $996 an ounce. It was $976 an ounce last week. And palladium's up 0.2%, trading at $970, up $2 from its mark at $968 an ounce last week. With silver outperforming gold, it's going to take less ounces of silver to buy that ounce of gold. So your gold-silver ratio drops this week to 88.26. It was 90.15 last week, and the dollar has been and continues to be under pressure, dropping from last week's mark of 105.11 on the index to 103.61 on the index this morning. Now, a good friend, David, good longtime client, sent in a question a few weeks ago. I've been kind of pushing it off because of the intricacies of answering this question in a short period of time. I'll do my very best. I don't know that we're going to get it accomplished. But David asks, how about a session that addresses the national debt of $36 trillion, the predominant owners of that debt, their own vulnerability, and the impact on the debt if the USA were to return to a gold standard? Thanks for covering this complex topic. Well, first off, let's look at who holds that $36.2 trillion of U.S. debt. It's spread around a bit. There's about $5.3 trillion held by other countries, and of that, we've got about $1.1 trillion held by Japan, $820 billion, just under $1 trillion held by China, $5.3 held by others. The Federal Reserve System holds $5.2 trillion. U.S. holders of savings bond own about $5.7 trillion. Intergovernmental debt, so other agencies within the government hold about $7 trillion. And then there's others, depository institutions, mutual funds, state, local governments, pension funds, etc., make up the balance of that debt. But a lot of it is held by ourselves through Treasury, through other agencies, and then with foreign holders of U.S. debt. So what happens if we return to a gold standard? Basically, the entire world economy, the global economy, would be shaken up. Currency issuance would, going forward, be limited by gold reserves. You couldn't just alter interest rates, et cetera, and increase the money supply. You could only increase the money supply if you could increase the gold assets standing behind it as a reserve. Liquidity would absolutely be diminished because of the clunky nature, if you will, of backing currencies with gold, and what you can do in the quick term is very, very limited because you have to move real assets to back up your currency. The response to inflation or deflation by central banks would absolutely be sluggish. Trade imbalances would emerge between those countries holding gold and those not holding gold. Obviously, those without the gold would be put at a significant disadvantage, and their import tariffs or their import costs would be much higher. And the real costs of borrowing would increase. So those that were in debt would absolutely face a struggle versus those who were liquid, adhered to Austrian School of Economics, and held gold and other real assets in reserve. So Dave, I don't know if that covers it, but I only got a short amount of time. Obviously, it's a very complicated subject with a lot of intricacies and interwoven impacts, but it's going to be very difficult, if possible at all, to go back to a gold standard. I think the answer is just fiscal responsibility and maybe some sort of a not rigid but flexible tie to gold or some other real assets in the future. I hope that answers your question. Well, we're not going to cover that specifically, I don't think, but we will touch on aspects of the debt, the effect on the economy, and other things going on around us tonight. In our webinar, we've got our second webinar of the year. Adrian Day of Adrian Day Asset Management and I will welcome Peter Schiff from Euro Pacific Asset Management. That starts at 7 p.m. Eastern Time. It'll run till about 8:30 Eastern Time. If you have not signed up, do so immediately. We want to have you there. We want to have you asking questions so we can cover what's on your mind, not what we think you want to hear. As always, we want you to go ahead and like us, subscribe to our YouTube channel, send us your comments and questions like Dave just did. Follow us on social media. Take our twice weekly Always Something Interesting alerts and our once monthly information line newsletter. But in the end, don't ever forget that getting rich starts with keeping what's yours.